Well, let's turn our attention now to BRICS. Of course, the expanding bloc now represents half of the world's population and over a third of global GDP.
Africa is redefining its financial future by breaking free from the US dollar's grip. Through BRICS, the continent gains powerful alternatives, boosting economic independence and stability. This shift could reshape global finance and empower Africa's growth like never before. Let's explore how this transformation unfolds. Introduction to BRICS and its role in global finance. BRICS, a coalition of 5 emerging economies, Brazil, Russia, India, China, and South Africa, plays a crucial role in reshaping global financial dynamics. This bloc collectively represents a significant portion of the world's population, economic output, and trade flows. BRICS aims to promote economic cooperation, development, and financial integration among member states and partner countries, especially emerging markets and developing economies. Through initiatives such as the New Development Bank, also known as NDB, and coordinated policies, BRICS seeks to diversify the global financial architecture, challenging the traditional dominance of Western financial institutions and the US dollar. The group prioritizes infrastructure investment, sustainable development, and enhanced trade among members, fostering economic independence and resilience. In global finance, BRICS encourages the use of its members' currencies for trade settlement to reduce reliance on dominant reserve currencies, thereby promoting a multipolar monetary system. This strategic positioning allows BRICS to influence global finance by offering alternative financial mechanisms and expanding South-South cooperation, crucial for regions like Africa seeking diversification and economic sovereignty. What is de-dollarization and why does it matter? De-dollarization refers to the process of reducing dependence on the US dollar as the primary currency for international trade, finance, reserves, and monetary transactions. For many countries, especially developing economies, dollar dominance exposes them to external shocks from US monetary policy changes, including interest rate adjustments and inflation. Reducing reliance on the dollar allows countries to gain economic sovereignty, insulating them from exchange rate volatility and capital flight driven by dollar fluctuations. It can lower transaction costs, reduce currency risk, and strengthen local financial systems by encouraging the use of domestic or regional currencies in trade and finance. This shift matters greatly for regions burdened by dollar dependency, as it can help mitigate debt crises triggered by unfavorable dollar movements and enhance control over national economic policies. De-dollarization aligns with the ambitions of blocs like BRICS, which advocate a diversified global currency system that reflects contemporary geopolitical and economic realities, offering alternatives to the historically US-centered monetary order. Current African dependence on the US dollar in trade and finance. Africa remains significantly dependent on the US dollar for international trade transactions and financial settlements. Although this dominance has seen a slight decline, data from recent years shows that approximately 45% of African cross-border payments still involve the dollar. This reliance has historically been driven by the dollar's role as the global reserve currency and the pricing of major African exports, primarily commodities like oil and minerals, in US dollars. African countries also often hold dollar reserves and conduct debt payments in the currency, exposing them to exchange rate risks and external economic pressures linked to US monetary policies. The dollar's stronghold limits the continent's economic agency, contributing to challenges such as currency volatility, inflationary pressures, and increased costs of foreign borrowing. Nonetheless, regional financial systems, such as West African and Southern African monetary unions, and initiatives by African institutions aim to increase the use of local currencies in intra-African trade to reduce some of the dollar's dominance and promote economic stability within the continent. How BRICS promotes the use of local and alternative currencies in Africa. BRICS fosters the diversification of currency use in Africa by encouraging trade and financial transactions in member and local currencies rather than the US dollar. The bloc supports mechanisms for bilateral and multilateral currency swaps and settlements that facilitate direct currency exchanges, bypassing the dollar as an intermediary. This approach reduces transaction costs, currency risk, and dependency on dollar liquidity. BRICS also assists in developing regional payment systems and infrastructure that enable smoother cross-border payments within Africa and with BRICS member countries. By engaging African nations through investment, trade, and financial partnerships, BRICS facilitates access to alternative funding sources denominated in diversified currencies. This strategic encouragement aligns with broader efforts to promote financial sovereignty, boost economic resilience, and support sustainable development across Africa. The role of BRICS financial institutions like the New Development Bank in Africa. The New Development Bank established by BRICS plays a pivotal role in supporting infrastructure and development projects in African countries. By offering loans and financing in local or alternative currencies, the NDB reduces dependency on lending in US dollars or other major currencies, mitigating exchange rate risks. The bank focuses on sustainable development initiatives, including energy, transport, and urban development, critical areas for Africa's growth. It also complements African financial institutions by providing access to capital for projects that might otherwise face challenges under traditional international banking systems. The NDB's role extends beyond financing to fostering cooperation, knowledge exchange, and capacity building among BRICS and African partners, thereby fortifying financial autonomy and regional economic integration. Examples of how African countries benefit from currency diversification. Some African countries have experienced tangible benefits from diversifying away from the US dollar. For instance, within the West African Economic and Monetary Union, increased use of the West African franc in trade has lowered currency conversion costs and enhanced regional trade integration. Similarly, South Africa's rand serves as a settlement currency for multiple Southern African countries, facilitating intra-regional trade with reduced exposure to dollar fluctuations. Countries engaging with BRICS members have gained access to alternative financing and trade arrangements using Chinese yuan, Russian rubles, or Indian rupees, which can smooth bilateral trade and investment. This diversification reduces the risk of sudden capital outflows linked to dollar volatility and strengthens macroeconomic stability. It also gradually develops financial infrastructure and deepens local currency markets, which lay the foundation for more sovereign economic decision-making and resilience against external economic shocks. Impact of de-dollarization on reducing transaction costs and currency volatility in Africa. De-dollarization in Africa could significantly lower transaction costs by cutting out the middleman role played by the US dollar in trade settlements. Typically, African traders must convert their local currencies into dollars before completing transactions, incurring fees and delays. Moving towards diversified currency use allows direct settlement between African and BRICS currencies, streamlining payments and making trade more efficient. This shift also helps reduce currency volatility since countries are less exposed to fluctuations from US monetary policy changes that affect the dollar's value. Instead, economies can stabilize trade by using regional or BRICS currencies, making exchange rates more predictable. Lower volatility translates to improved economic planning and less inflationary pressure from sudden currency swings. Additionally, diversified currency usage encourages the development of deeper foreign exchange markets for local currencies, fostering financial maturity. Overall, de-dollarization offers African economies a chance to enhance their financial resilience and reduce dependency costs linked to dollar volatility, laying groundwork for more stable and cost-effective cross-border trade. BRICS payment systems and bypassing the US dollar-centric infrastructure. BRICS is developing a dedicated payment system, BRICS Pay, to facilitate financial transactions within member countries without involving the US dollar or Western-controlled networks like SWIFT. This system employs technologies from existing national payment platforms, such as China's WePay and India's Unified Payments Interface, integrated with blockchain and digital ledger technology to ensure secure, transparent, and efficient cross-border payments. By enabling direct settlements in local or BRICS currencies, BRICS Pay reduces conversion costs and weakens dollar dependence. This innovation also counters the geopolitical risks tied to sanctions and dollar control, especially for countries facing restrictions under Western financial rules. The system aims to foster multipolarity in global finance by creating an alternative financial infrastructure controlled by BRICS members, boosting trade and investment flows. For Africa, linking to this payment network could enhance access to diverse financial ecosystems and facilitate smoother trade with BRICS countries while preserving sovereignty over payment processes. Challenges Africa faces in moving away from the dollar, including commodity pricing. Africa's shift away from the US dollar faces several challenges, one major being the pricing of primary commodities like oil, gold, and minerals, which are almost universally priced in dollars. This entrenched system complicates efforts to settle trade in alternative currencies because global markets and contracts remain dollar-based. Furthermore, many African currencies lack sufficient liquidity and convertibility, limiting their acceptance in international markets and complicating their use in trade settlements. African economies also face the challenge of currency volatility in many BRICS currencies, which can be as destabilizing as dollar fluctuations. Infrastructure and technological gaps in payment and settlement systems impose additional barriers to widespread adoption of alternatives. Political and regulatory fragmentation among African nations further complicates currency integration efforts. Lastly, existing debt obligations denominated in dollars pose significant risks, as repayment in other currencies is often not possible. Overcoming these obstacles requires coordinated policy initiatives, improved financial infrastructure, and gradual transition approaches that align commodity pricing mechanisms with emerging currency arrangements. Geopolitical implications of Africa engaging with BRICS on de-dollarization. Africa's increasing engagement with BRICS in pursuit of de-dollarization carries substantial geopolitical implications. Aligning financially with BRICS represents a diversification of Africa's global partnerships, moving away from traditional Western dominance in trade and finance. This shift potentially empowers African countries with greater financial sovereignty, but may provoke tensions with Western powers that benefit from dollar hegemony. The initiative could reshape Africa's geopolitical alignment by deepening ties with countries like China, Russia, and India, who seek to expand influence through economic channels. It also raises questions about Africa's position in global diplomacy amid competing blocs. Additionally, linking with BRICS financial systems can lead to increased resilience against unilateral sanctions and financial exclusion driven by the US-led system. However, it may expose African countries to new geopolitical risks related to BRICS members' own external conflicts or tensions. Overall, Africa's engagement enhances its strategic autonomy, but requires careful navigation of emerging global power dynamics. Future outlook: BRICS, expanding influence and potential new financial frameworks in Africa. The future outlook for BRICS influence in Africa includes considerable growth in financial cooperation frameworks. The ongoing development of BRICS Pay and other cross-border payment systems aims to institutionalize local currency use and reduce dollar reliance. BRICS countries are also exploring potential creation of a common digital currency or a linked currency system, which could further streamline trade and investment in Africa and among member states. As negotiations on payment system interoperability advance, Africa stands to benefit from more inclusive and cost-effective financial infrastructure. This expansion is likely to coincide with increased BRICS investments in African infrastructure and development projects supported by institutions like the New Development Bank. The broadening of membership and partnerships could deepen financial integration, enhancing Africa's access to alternative capital sources. However, the success of these frameworks depends on overcoming currency convertibility challenges and ensuring regulatory alignment across diverse jurisdictions. If achieved, this transformation can underpin a multipolar global financial architecture where Africa plays an active role as both a beneficiary and contributor. Why breaking free from dollar dominance could strengthen Africa's economic sovereignty. Breaking free from dollar dominance means reclaiming Africa's power to shape its own future. Reducing reliance on the US dollar gives African nations greater control over monetary policy, trade, and debt management, freeing them from external pressures like US interest rate shifts and sanctions. This financial independence lowers exchange rate risks and prevents sudden capital flight, while promoting policy autonomy and stronger domestic markets. It creates opportunities for investment and economic stability. More importantly, this shift directly benefits African people. Youth gain access to fairer funding and innovative opportunities. Entrepreneurs and small businesses thrive without currency barriers, and rural communities build resilient, self-sustaining economies. By embracing de-dollarization and financial sovereignty, Africa steps forward as a confident, independent partner in global finance, empowering its people to define their own prosperity and build a brighter, inclusive future. Africa's journey with BRICS is just beginning, but its impact is already clear. By embracing new financial alternatives, Africa is carving out a stronger, more independent economic path. Stay tuned as Africa continues to break barriers and shape its own financial destiny. Thanks for watching.